Welcome back to the weekly gold market update for August 10th, 2026. $3,378 and $3,448 served as our key downside price targets for gold. Is the market about to crush those levels, or did we just form a major 20-week cycle bottom? Today, we use Hurst cycle analysis to track the 18-month wave, calculate upcoming FLD targets, and predict exactly what to expect heading into September and October. Before we dive into the cycles, please take a moment to review the financial disclaimer on your screen. This analysis is for educational purposes only. Let's start by looking at the 18-month cycle. As highlighted in my previous gold market update, the $5,626.80 all-time high recorded in January stands with high certainty as a very long-term cycle peak, most likely representing a 16-year cycle crest. Since establishing that historic high, the gold market declined significantly into a June low of $3,955.40, shedding $1,671.40, or 29.7% from its peak. Since making that June low, gold has been trading directly along its future line of demarcation, or FLD. Furthermore, 12 months have now elapsed since the previous 18-month cycle low formed in 2025. Does this elapsed time imply that the broader market decline has concluded? To answer this, we must analyze the shorter constituent cycles. Under the standard nominal model, the current 18-month cycle was scheduled to form its trough between November and December. For the long-term trend, it remains critical that gold continues to trade above its FLD. A sharp and decisive cross below this line would signal compounding bearishness, opening the door for significantly further decline. Moving on to the 40-week cycle, the $3,955.40 low was formed $507, or 14.7%, above our lower $3,448 downside target. Since the previous 40-week cycle low in March 2026, the market has shown no definitive signals that a new macro bull trend has commenced. For a genuine bull run to initiate, the gold market must cross sharply and cleanly above its 40-week FLD. Until such a breakout occurs, the downside target at $3,448 remains fully valid. Currently, gold has rebounded toward its FLD and is expected to treat this line as dynamic overhead resistance. The next major 40-week cycle low is projected to form around mid-November. If you're finding this cyclic breakdown helpful, make sure to hit the like button and subscribe to the channel right now. Dropping a comment below with your own gold targets helps more traders discover these Hurst cycle insights. Now, let's examine the 20-week cycle. According to Hurst's rule of synchronicity, the March 40-week cycle low was simultaneously a low for the 20-week cycle. Understanding this rule of synchronicity is vital for traders. Analyzing shorter cycles frequently enables us to pinpoint longer-term cycle troughs with a high degree of success. Between the March low and the July trough, 16 weeks elapsed. Given that the 20-week cycle carries an average nominal length of 19.48 weeks, we can begin evaluating the strong possibility that a 20-week cycle low formed in July. However, we must remain prudent and acknowledge the alternative scenario. The 20-week low may not be fully established yet. What comes next for the 20-week cycle? If we assume the July low represents the true 20-week cycle trough, gold should technically encounter resistance at its FLD before resuming its downward trajectory toward its price targets and forming the final 20-week low of this combined 40-week and 18-month trough structure. This low should materialize around mid-November. If the 20-week low has not yet formed, we will recalculate the timing metrics accordingly. A clean upward breakout through the FLD would definitively confirm that July marked the 20-week low. Next up is the 80-day cycle. From the March 2026 low, two distinct 80-day cycles have completed. The first concluded on May 28th, lasting 66 days, and the second on July 29th, lasting 62 days. Both align closely with the Hurst nominal average of 68 days. On August 5th, gold crossed above its 80-day FLD at $4,185, activating an upside projection toward $4,407. On Friday, August 7th, gold reached a high of $4,432.30, successfully fulfilling this objective. The next 80-day cycle low is scheduled for approximately October 2nd, with the peak expected around late August. We must monitor whether this upcoming peak forms to the left or right of the cycle midpoint. A left-translated peak would indicate underlying weakness and signal a sharp decline into the next low. Finally, let's look at the 40-day cycle. On July 29th, gold completed its latest 40-day cycle low. Because this represents the fourth 40-day cycle since the March low, it reinforces the likelihood that the July low also served as the larger 20-week cycle trough. On July 5th, gold crossed above its FLD at $4,164, projecting an upside target of $4,312, which was met that very same day during a powerful $207 daily expansion range. This magnitude of price action confirms July 29th as a major structural turning point, placing the odds heavily in favor of a completed 20-week low. By crossing its FLD, gold confirmed July 29th was at least a 40-day trough. The next 40-day low is expected around September 1st. In a balanced market structure, gold should find support along its cycle line near $4,220 during this pullback. Conversely, a clear breakdown below the FLD would reconfirm lingering bearish pressure. Gold is at a critical turning point as long-term cycle pressure meets short-term bounce targets. Watch the $4,100 support and FLD resistance levels closely into September. For more daily charts or the short-term Trader's Corner and precise FLD levels, scan the QR code on your screen now or visit tradingmarketcycles.com. Thank you for watching. Don't forget to hit the like button, subscribe, and ring the notification bell so you never miss a weekly update. Let me know your thoughts in the comments below, and I'll see you in the next analysis.